Hi everyone, in this video we'll be going over A-Level Accounting 2023 May-June Paper 2-3 question number 1. So this is paper 2 which consists of 4 questions, 2 of them will be of 30 marks and 2 of them will be of 15 marks, and the total time limit given for this paper will be 1 hour and 45 minutes. Since question number 1 is of 30 marks, ideally, you should be spending about 35 minutes in order to complete this question, and in this video as well, we will be attempting to solve this question under 35 minutes. So without any further delay, let's get started. Hamza owns a retail business with a financial year end of 31st December. On 31st December 2022, inventory was valued at 15,330. However, this figure included 30 damaged items which had a cost price of 32 each. Of the damaged items, 23 will be scrapped with no value, and the remaining 7 items will require repairs costing a total of 126 before being sold at the normal price of 48 each. Okay, for the first part of this question, we need to explain with reference to an accounting concept how damaged inventory should be valued. So always remember that the damaged inventory should be valued at the lower of cost or net realizable value, and we're valuing it at the lower of cost or net realizable value so that our assets, which is the inventory, will not be overstated, and that is in accordance with the prudence concept. Let's write it down. Inventory should be valued at the lower of cost or net realizable value. Net realizable value just means the value that we can gain from the damaged inventory now, in accordance with the prudence concept. Okay, now for the second part, we need to calculate the corrected valuation of inventory at 31st December 2022. For this, we need to figure out two different things. The first one will be our cost of the inventory or the damaged inventory and the net realizable value of those damaged inventories. So let's figure out the cost first. We are already told that 30 will be damaged with the cost price of 32 each. So the total cost is just going to be 30 multiplied by 32. This results in the value of 960. Now let's figure out the net realizable value. Now this is the value at which those damaged inventories can be sold now. Out of the damaged items, 23 will be scrapped with no value. It means that 23 will have the value of 0. And then we're told that the 7 items will require repairs costing a total of 126 before being sold at the normal price. If you're given the new normal price and the cost of repairs, the net realizable value is just going to be the new selling price minus your repair cost. In this case, the new selling price is 48, so that is going to be for 7 items. So 7 times 48. Then we also need to subtract the repairs cost, which was a total of 126. And this gives the net realizable value to be 210. We can clearly see that the lower of cost and net realizable value is 210. Now let's figure out the correct valuation. We start with the given value, which is 15,330. And always remember that inventory is valued at cost, but in this case, the cost is greater than net realizable value, which means that net realizable value should be included in place of cost. For this, we first need to subtract the original cost of 960. Then we'll just add our net realizable value of 210. This results in the value of inventory at 31st December 2022 to be 14,580. This concludes the second part of this question. Now let's move towards the third one. We're given additional information which has been extracted from the books of accounts at 31st December 2022. Alright. Okay, at 31st December 2022, no record had been made of goods taken by the owner for his own use, costing 550. Now, this should be included in our cost of sales, and this should be subtracted within the cost of sales because this is the drawings of goods by the owner. Now, for the second one, the balance of 760 on a credit customer's account is to be written off as irrecoverable. So, this is our irrecoverable debt. Then an allowance for irrecoverable debts of 5% is to be created based on the amount outstanding for credit customers. Let's figure out the allowance. We start with our trade receivables, which is given to be 18,460. And always remember that while figuring out the allowance for irrecoverable debts, you first need to subtract any irrecoverable debts for the year, which in this case is given to be 760. And only then can we multiply it by the rate of allowance, which in this case is given to be 5%. Now this gives our allowance for irrecoverable debts at 31st December to have the value of 885. Now always remember that you need to compare your closing balance for the allowance for irrecoverable debts to that of the opening balance, and if there is an increment, it should be treated as an expense, and if there is a decrement, it should be treated as an income. Let's have a look for our opening balance. Okay, we're actually not given any opening balance, so we just assume the opening balance to be 0. In comparison to 0, 885 is an increment. So this will be an increment in the allowance for irrecoverable debts, which we need to treat as an expense. Then the rent of 5100 is paid at the end of every 3 months, and the rent for 3 months ending 31st January 2023 is accrued. So this rent of 51,000 for the 3 months, that's just going to be November, December and January. So November and December is for 2022 and January is for 2023. And remember that our ending date is 31st December 2022, which means that we only need to consider the incomes and expenses till the month of December 2022. So we no longer need to include this January's rent. So we just need to figure out the rent corresponding to the 2 months of November and December. In this case, we know that the rent for 3 months is given to be 5100. Now rent for 1 month will just be 5100 by 3. We're just utilizing the unitary method, and we require the rent of 2 months. So that will be 5100 by 3 multiplied by 2, which results in the value of 3400. And we're told that this is accrued, which means that we are still yet to pay 3400 corresponding to the months of November and December. And we need to adjust it to our rent given above in the table, which is 1700. So we need to add the accrued amount as well. And this gives the total rent for the year of 2022 to be 20,400. All right. Now the policy is to depreciate furniture and equipment by 20% per annum using the straight line method on a month-by-month basis. However, the furniture and equipment account includes equipment purchased during the year that cost 6,500. So this just means that this cost of 36,000 already includes the new purchased equipment with the value of 6,500, on which depreciation of 650 has not yet been charged. So we already know that the depreciation on the equipment costing 6,500 is 650. So we only need to figure out the depreciation for the remaining amount. So the remaining depreciation, we know that we are utilizing straight line method, which means that we need to charge this 20% on cost. So let's figure out the remaining cost. That is 36,000 minus 6,500, and we just multiply it by the rate of 20%, which gives the remaining depreciation to have the value of 5,900. Now the total depreciation is just going to be our remaining that we just calculated to be 5,900 plus the depreciation charge on the new equipment of 6,500, which is given to be 650. This results in the depreciation charge for the year to have the value of 6,550. Okay, now for the third part of this question, we need to prepare the statement of profit or loss. We can start with our revenue. Let's have a look above. Revenue is given right here. It's 299,490, and we're also given the returns. And the returns are both on the debit side as well as the credit side. So the return on debit side will represent our sales returns, whereas the returns on the credit side will represent our purchase returns. Okay, so we need to subtract this sales returns of 5,460 from our revenue of 299,490 in order to figure out the net revenue. Let's write it down. So we had the total revenue to be 299,490, but we were also given sales returns of 5,460. Now, after subtracting the sales returns, we get our net revenue to have the value of 294,030. The next step would be to figure out our cost of sales. We start with opening inventory. Let's have a look above. The inventory at 1st January 2022 is given right here to be 16,780. Let's write it down. Then we can move towards purchases. We're given purchases right here to be 182,770. Then we're also given purchases returns, which we need to subtract. Let's have a look above. It was 4,810. And in the first part of our additional information, we are also told that goods taken by the owner for his own use was of 550. Again, we need to subtract it. So that will be goods taken for own use of 550. Then we can finally move towards our closing inventory. And remember that for closing inventory, we already calculated it in the second part of this question. So that is just going to be 14,580. Again, let's check if we have any other expenses that we need to include in our cost of sales. Okay, we have carriage inwards right here. So we need to include this as an expense as well. That is going to be 1,720 as our carriage inwards. And I think that's all for cost of sales. So now we can just figure out the total. That will be the sum of these 6 amounts. So that's 16,780 plus 182,770 minus 4,810 minus 550 minus 14,580 plus 1,720, which results in the total cost of sales to be 181,330. Now we need to subtract it from our net revenue in order to figure out the gross profit. And that is just going to be 294,030 minus 181,330, which results in 112,700. Now the next step would be to add any of the incomes. Let's have a look above. There were no incomes given in the additional information, so we can just look for it in the table. Okay, discounts is given right here on both the debit side as well as the credit side. So always remember that the discounts on the debit side will represent our expense, which will be discounts allowed. And the discount on the credit side will represent our income, which will be discount received. So we need to record the 620 as our income. Let's write it down. So we need to add the discounts received. And since that is the only income, we can just write it down right here. That will be 620. Now we need to add our income to the gross profit. That will be 112,700 plus 620, which results in 113,320. Now the next step would be to subtract all of our overheads. Okay, so we can start with our discounts allowed of 840. Then we're also given carriage outwards right here. That's 3,860. Then we're also given administrative expenses. That's 14,380. Okay, then for furniture and equipment, we've already figured out the depreciation, which was 6,550. Let's write it down. So that will be depreciation on furniture and fixtures. Sorry, that was furniture and equipment. And we figured it out to be 6,550. All right. Then we're given insurance. That's 4,320. Okay, then we're given rent, which we figured out to be 20,400 after adjusting for our accruals. That's rent payable, and we figured it out to be 20,400. Okay, for trade receivables, we've already calculated the allowance for irrecoverable debts, which we need to treat as an expense. Let's write it down. So allowance for irrecoverable debts. And this is just 885. Then we have wages. That's 37,330. Alright, we were also given irrecoverable debts of 760. And we have included all of our information. So we recorded this, this as well, we recorded the rent as well as the depreciation. Okay, now that's all for our overheads. Let's figure out the total. That is just going to be the sum of all these amounts. So that's 840 plus 3,860 plus 14,380 plus 6,550 plus 4,320 plus 20,400 plus 885 plus 37,330 plus 760, which results in the total overheads to be 89,325. Now we just need to subtract it in order to figure out our profit for the year. Okay, so that's just going to be 113,320 minus 89,325, which results in our profit for the year to have the value of 23,995. Alright, that's all for the third part of this question. Let's move towards the fourth one. And remember that we're given the working section. So you guys need to be showing all of these workings in that particular box so that you get your markings correctly. Okay. Now for the fourth part, we need to state the double entry required to record goods withdrawn by an owner for personal use. So goods withdrawn definitely means drawings. And always remember that drawings will be on the debit side. So that's drawings. And in our income statement as well, we are basically subtracting the goods withdrawn for own use from our purchases. So again, in our double entry as well, the next factor that will be affected due to the drawings will be our purchases, because now the purchases will be reduced. Okay, that's all for the fourth part of this question. Let's move towards the fifth one. We're given additional information. Hamza is concerned that the performance of the business has declined in recent months. He is considering two options to increase the gross profit of the business. The first option will be to purchase goods from a different supplier who is prepared to offer a large trade discount, and Hamza would need to order in bulk but less frequently than now. And for option B, we need to increase selling prices and increase monthly expenditure on advertising. Now we just need to advise Hamza which option he should choose, and we need to justify our answer by considering both the financial as well as non-financial factors. So let us first consider option A. So if we are purchasing goods and we're ordering in bulk, and we're also being offered a large trade discount, which just means that our cost of sales will now be reduced. So cost of sales will be reduced. And remember, the formula for gross profit is just revenue minus cost of sales. So if the cost of sales is reduced, then the overall gross profit will improve. We can write that down as well, leading to improved gross profit. Now the next factor that we need to consider is that we're ordering in bulk. So if we're ordering in bulk, it means that the large orders will need to be stored. So there might be additional storage cost. So there might be additional storage cost for bulk orders. Now the non-financial factors is that we are now purchasing goods from a different supplier. So we can question the reliability of this new supplier. will the new supplier be reliable? Okay, this is of 7 marks, so we can write down 3 considerations for option A, and let's move towards option B now. In option B, we are increasing the sales prices. So if we are increasing the sales prices, our revenue will be increased, which means that our gross profit will also be increased. But this is only the case if our number of goods sold will be maintained, which means that we need to maintain our demand. So we can just write that it will increase gross profit, but only if the demand is maintained. Because if our total number of units sold will decrease, then the total revenue will also decrease, leading to a decreased gross profit. Now, the next thing is that there will be increment in monthly expenditure on advertising. So overall, the advertising expenses will reduce our net profit. Advertising expenses will reduce the net profit. And since we're talking about advertising, we can also question whether or not the advertising will be effective. So, will advertising be effective? Okay, now based on these factors, we need to clearly write down our decision. So personally, I will go with option B, because in option A, we are making bulk purchase, which means that goods will need to be stored, and during storage the quality of goods might be reduced. And since we are considering a new supplier, we do not know whether or not the supplier will be reliable and whether or not the supplier will be able to send us the goods of the same quality. So Hamza should choose option B, since in option A, a new supplier is considered and we do not know whether they will be able to supply quality materials. So this concludes our fifth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.